It's January 19th, 2019. I'm Justin Castelli, CEO of RLS Wealth Management, and welcome to your All About Your Benjamins weekly mixtape and weekend review video. Welcome to another weekend review video. Let's get right to the headlines impacting or maybe not impacting your financial plan and investments. And we can't start the week without mentioning the loss of a legend in the investment world. John Bogle, the founder of Vanguard Mutual Funds, passed away this week at 89 years old. And there have been a number of tributes to John, way better than what I could ever do. So in my little small personal tribute, reflecting on his life and the work that he did for investors and just for the world, I linked to a lot of those pieces that I consider way better than mine. So be sure to check those out if you're not familiar with John and his work. Read those, read more about what he did for investors as far as cutting our fees and saving us trillions of dollars over the years of investment fees, and also just about his life in general. He's a fascinating man, did a lot of great work. So be sure to read those. As I shared, I was not a Boglehead right away. I did not really discover Vanguard and what they were doing and what John did until later in my career. Growing up in the industry, I worked for firms that did not allow us to use Vanguard, so the time was not spent researching them and reading his work. But once I started my own firm and had free reign of investments and creating my portfolios, I began to read more and more about the cost and what that impact is on investing and index investing versus active investing, all of those things that John preached, and those have made their way into my portfolios. And a lot of the people that I look up to, we won't necessarily call them disciples, but are big-time followers of John, and that kind of trickles down to me as well. So be sure to check those. He had stepped back from Vanguard years ago, but was still a very important person into what they do, and then also in the investment world. And he also just released a book this year, well, I guess maybe it was the end of last year, which I have. It's on my bookshelf of the office, and we'll definitely be reading sooner rather than later, given his passing this past week. So as we move on to more traditional headline news, the markets this week ended the week on a high note. We are on a pretty good run over the last few weeks. If you think back to the headlines towards the end of the year and even to the beginning of the year, they were a little bit more doom and gloom, and now it seems to be a little bit more optimistic. We've got good economic news coming out. The Federal Reserve has relaxed a little bit, which investors are liking, and the concerns of a slowing economy are maybe subsiding a little bit for now. Again, think back 2 weeks ago what the headlines were, or 3 weeks ago, different stories. So the tune can change very quickly, and as long-term investors, and as John Bogle would say, don't get caught up in all those. Think about the long term and not week to week. Yet here I am always addressing it, but I know what's on your mind and something worth talking about. I did want to point out one thing just to hammer home the long-term investment mindset and not going day to day, week to week. From the Christmas Eve scare of the markets until the end of the week, the Dow Jones, S&P 500, and NASDAQ indexes are all up double digits. So if you were trying to time the market, or your emotions got the best of you late in December and you sold your investments and have yet to get back in, you missed out on a pretty good recovery. Still not back to all-time highs, but in a short amount of time, the markets have gone on a real good run. Will it continue? I don't know. Will it step back? I don't know. A lot of investors are talking about a retest of the December lows, or retesting, coming back down some, that we've gone too far too fast. That's a possibility, obviously, or things could mellow out and kind of plateau for a while, or we could continue this run. No one knows, which is all going back to the reason of long-term investing and being diversified. Speaking of being diversified, Germany reported numbers this week that showed that their economy was slowing at the greatest rate, so it's the slowest growth rate right now in a number of years. And I bring this up because I am an advocate of global diversification, having a globally diversified portfolio. And when you see numbers from Germany showing that their economy is slowing, that isn't necessarily a positive for international investing. That being said, I don't believe that investors should shed their allocations overseas, because there's a lot of growth there. We've talked about this before. Home country bias is a very real thing, and it can impact portfolios. And unfortunately, headlines like this don't encourage people to diversify away from their U.S. portfolios if they're in America, and getting that international exposure. I still think you should have the international exposure. As we saw from December until now, things can turn very quickly, and if you're trying to time those markets, it's not a good idea. Again, look at December until now. That can apply to other markets as well. So I think even though Germany looks like it's slowing, which may mean other areas of the world are slowing as well, You still need to have the international exposure. If anything, if they are going to continue to slow, then we might be rebalancing from U.S. strength into international weakness, which sounds counterintuitive, but is the best thing to be doing over the long run. But wanted to put that out there since I'm always talking about global diversification. Moving on to back home, the shutdown continues, as we all know. Some of the federal employees have missed their first paycheck now, so life is getting stressful or more stressful for them now, and still no end in sight for the shutdown. That being said, as of the recording, the announcement has not been made, but last night President Trump mentioned that he has a special announcement, a big announcement Saturday sometime about the shutdown. So we'll see what that is and what that means. Maybe there's been some type of agreement, maybe not. Sometimes these big special announcements are just more of a headline grab and not as exciting or meaningful as we would hope they would be. But we'll see what that is. Finally, last major headline, going to impact all of us. Netflix is raising their prices. So we cut cable years ago in my preparations for transitioning to have my own business, and we don't really watch a lot of TV as it is, but we are avid Netflix users. My wife has watched the whole Friends series multiple times over the last couple of years. It ends up being background noise for us, but nonetheless, we use Netflix a lot. Our bill is going to be going from $11 a month to $13, and the base plan, which allows you to only stream one device at a time, is going to be $9 a month. I don't foresee a lot of outrage about this. I don't see a lot of people dropping Netflix, but they are raising their fees, which will impact all of us. So we'll have a couple dollars less every month to maintain the ability to watch pretty much everything that we want to. So that is everything for this week's mixtape. Thanks for watching. I appreciate your support. If you're liking these videos and the other videos, please make sure to take a moment, give us a like, leave some comments. I would love to get some dialogue going in the comment section about some of these topics that I'm talking about. Also, let me know what you would like to hear and like to see. Don't miss out on the mixtape below, some great posts. If you're watching on YouTube or listening on your Alexa device, head on over to allaboutyourbenjamins.com to read the mixtape and read these great posts from other writers around the world. Well, that's it from this week's Week in Review. Thanks for watching. I appreciate the support, and again, leave comments below and like. Thanks for watching, and we'll see you in the next episode.